What's going on, guys? I hope all is well. I wanted to talk about getting started in the stock market and what's the best method, in my opinion, of getting started in the stock market, because there are so many different options out there when getting started. You have buying stock, you have day trading, you have swing trading, you have shorting a stock, you have buying call options, buying put options, muscle leg options, all different types of methods a person has in getting in the stock market. So it can be a daunting task of trying to figure out how to get started, what should I do, because if you go on, different platforms, different social media platforms, you will see a lot of people promoting different types of methods. A lot of people promoting day trading. A lot of people promoting, getting into option trading. So there's a lot of different platforms, but it's very important to choose the platform or choose the method of getting in the stock market that fits you, and your plan and what are you trying to accomplish moving forward. So in my opinion, the best method of getting started in the stock market is being a long-term investor, being a buy and hold investor. And what I mean by that, when you are a buy and hold investor, you are buying a share or shares of a company, and you planning on holding that company, holding that stock for a very long time. This is the method that great investors such as Warren Buffett and Peter Lynch and a host of others have chosen as far as getting started in the stock market. And the number one reason I would say that that's the best method of getting started, because when you are getting started and as far as investing and you buy a stock, you are a buy and hold investor, that eliminates the aspect of gambling. It takes away the aspect of guessing and being, for example, a trader, essentially, because there's a difference between being an investor and being a trader. When you are a trader, you are trying to buy a stock and you're trying to sell it maybe in a day or maybe in a few days or maybe in a month, but you're buying a stock for the hopes of a profit to sell, and you repeat that game. Whereas if you are an investor and you plan on, being an investor, a buy and hold investor, you are buying good companies that have great balance sheets. You're trying to buy them at good prices with the hopes that, hey, if you hold this company for, 5 years, 10 years possibly, you can be able to really incur great gains, capital gains, and be able to sell it at a great discount. At a great price. So that's the great benefit of being a buy and hold investor, because it's very hard. A lot of people fail at day trading. They said the stat is, 90% fail at day trading because it's hard. It's very hard. You have to really know the technicals of a company, technical analysis of a company, looking at charts and figuring out, hey, should I buy here? If I buy here, what can it go to? You really have to be a student of technical analysis and analyzing the charts and things of nature, which is very hard because you are going against other day traders. You are going against institutional trader, which makes it hard. But when you are a buy and hold investor, you are holding a company. So meaning when you buy a stock of Apple per se and it goes down, it's okay because you plan on holding a company, years. You're not planning on holding a company for a day or a couple of days. So you're able to weather storms. You're able to weather market crashes. You're able to weather swings in the market. You're able to weather socio-economic things because you're not looking at that per se, because you are planning on holding for the long term. So that really doesn't bother you. Only thing that will impact the long-term trader as far as, looking to sell is if something is going on with the company. The CEO has something going on. The balance sheet of the company has something going on. What's going on with the company? Is the company still doing well? Is it profitable? what is going on with the company, that's when you need to look towards sell. But it's natural for things going on in the market, such as crashes, such as a down year, or a down month, or just a bear market. That's normal. But long as you are a holder of the company, holder of the stock, your portfolio or stock may go down, but you still own the company, and you just have to have the patience and know that based on the stock market history, the stock market has gone up over the past 10, 20, 30, 40, 50, 60 years based on the track record. You just have to have patience and believe in the reason why you chose that company. But I believe that being a long-term investor is the best method as far as getting in the stock market, because it eliminates guessing and gives you a chance to buy good companies at great prices and have ownership in those companies. So I just wanted to share it with you guys, because I know getting in the stock market can be a daunting task, but I believe buy and hold investing is the best way to get involved. So I just want to share it with you guys. If you could do me a favor, hit that like button, subscribe, and share this video with someone who needs to hear this message. And let me know in the comments, what do you guys think about buy, hold, investing? Do you do it? And let me know in the comments. I appreciate it. And I thank you for tuning in. And I'll talk to you guys soon. Peace.